Good morning, traders and investors. Welcome to Thursday's edition of Benzinga's Pre-Market Prep, brought to you by the good people at OptionsHouse. Joe Young, how you doing? What you had for dinner last night?
Oh, well, funny you should ask, Joel. I actually came home to a delicious dinner of homemade pasta salad and lobster.
Lobster? What, you do the Costco thing or what?
No, Bush's actually.
Huh.
I guess they were on sale or something like that. Costco is the place to buy seafood, though. You know, I'm sure you've done it before. Or are you allergic to seafood too?
I am allergic to salmon and lox, but I can eat lobster and crab and shrimp, all that you can put in front of me.
Awesome. I'm a seafood nut, so I could eat 12 lobster tails, in one sitting and not be satisfied.
Actually, I've been on a seafood diet.
Oh yeah.
When I see food, I eat it.
Joel, wah, wah, starting out with a bang.
Where's
here
my
right
soundboard?
now.
I need the cricket sound.
We're working on the soundboard. We got to talk to Jason and Fernando about that. Get us a soundboard
I'm
here.
cutting you off. XOM just broke.
Okay,
XOM
okay.
just broke right now. 8:01 seconds ago. $1.91 versus $1.92. Looks like a miss by a penny. We're just waiting on guidance here from them as well.
Look
Brown
at
price
hardly
begin with-
moving until they say the guidance, huh?
Yeah, there's no move. It was ticking up at 96 bucks right before the report. Now it just dropped to 95.31. So it did just drop down 70 cents here, right on that initial just earnings headline. I haven't even seen the sales go by here yet, just the earnings so far. But it's sitting here, it's waiting. Actually, it's not trading. Everybody else is waiting on the same thing, probably the sales and the guidance here. Now we just ticked to 95 bucks, so we just ticked down 11 cents. Best bid's down at 94. This is live action for you here, folks.
On Benzinga's pre-market prep. I will say this thing is really taking a haircut, though. Came down, made that all-time high. Remember how it was lagging forever when ExxonMobil had been 94. Ouch.
Still trying to find its home. 94 offer now, Joel.
94 offer for size?
900 shares. I don't know if we call it size. 93.60 just ticked.
We're
moving around on this ExxonMobil.
This is not.
Look at those four. Look at that breakdown though, because you got the four lows from the last 4 days, all in the same area. The quadruple bottom, Joel. It's breaking through the quadruple bottom.
Oh man, too bad that don't happen in the regular session, huh? They'd whop on something like that, and now it's going to be 95 is going to be your resistance point. Let's try and find some support for people here that are hold on. I mean, we're getting back down to like Warren purchase territory, right? When we had the big gap up, that was like from the mid 92 level. So Warren might be underwater in this a little bit. Maybe him and Icon will come in and start do some buying. But to get a level, you did have a low. We're trying to see it 92.92. That was on December 2nd, and you had another low at 93.23. We haven't gotten that low yet here, so we'll keep an eye on those levels. Right now, the initial spike is 93.60. Doesn't seem to bother the S&Ps that much.
No, the S&Ps really haven't moved off this. We were up 6 points, and I mean, there's a lot of drivers that are driving the S&P higher here today. Facebook, holy cow. They reported earnings, and they were pretty good, 31 cents versus 27. The sales were great, 2.59 billion versus 2.33 billion, but the stock just kept climbing through the entire session. On the call, Brent, you got details from the call, because every time they were saying something on the call, this was popping higher. It's up $9 here this morning, trading at new all-time highs. That's a cool 17%. 62.75. Brent, what's the details from that call?
The call was described as definitely upbeat. Let's see. Let me give you a couple of highlights here. We got Sheryl Sandberg saying part of what's driving our growth is video ads, saying the company will be focusing on improving the quality of ads and the user experience. Mobile was just a huge part of this quarter. Mobile ad sales now 53% of total sales. Ooh. More than half their sales are coming from mobile ads. Monthly active users up 16%. And this is the one I was saving for you, Dennis, with the stock up 20%, over 62 bucks. Facebook is now worth more than, are you ready for this, McDonald's and eBay combined.
Wow.
That's pretty huge if you ask me. And then analysts...
incredible, actually.
It really is. And then analysts were just over the top on this one. A couple analysts citing strong mobile engagement rates, which are improving, better average revenue per user, improving ad trends, and then a Deutsche Bank analyst was saying a pretty blatant comment here. Facebook's ascendancy and execution in 2013 has been, quote, near flawless. So again, the analysts on Facebook's just climbing over themselves to get more and more bullish on this one.
I can't believe that. What is the market cap on Facebook now? What is it? Do you know? Do you have it in front of you? The new market cap? It was like 135 billion, I think, as of the close yesterday. So now it's tacking on. Quick math, another 17%.
So we're over 136 billion. Over 100.
I think that's what we were yesterday. It was 136 billion.
I see the close at 130 billion as of 53.
Yeah, so now
53.
you're another 17%. So you're at least what, 13, 20 bucks, 20 billion higher. You're like over 150 billion now.
Wow.
That's incredible when you think about that. I mean, they do have 1 billion users, so impressive in that, but they don't monetize them like a McDonald's does. That's for sure. So wow, that's an incredible market cap.
What's the PE on this thing, or what was it going into this? Yeah.
Does it matter?
Good point.
I mean, it definitely was over 100 as of yesterday. So now with the move today, we gotta be pushing 100, 150, 140, 150 PE.
Okay, well, let's just look at the numbers here, and someone definitely has opinion here at $63.95, just under the $64 level. Yeah, the last three 15-minute brackets, you've hit $63.95, $63.95, $63.95. So I guess that's the resistance. You've fallen.
New number.
Yeah, you've fallen off. You've fallen off to the $62 level since it's actually 62 and a quarter here. No, 61.95 was the low in your last bracket. So there's your 2-point range, 61.95 to 63.95. We'll see how this trades up to the open, but if you're looking take some profits on the long side here, use that 63.95. Dennis, did you get caught up in this foray at all, or did you?
No, I learned my lesson from last time I tried to short Facebook. I got killed, so I did not short it this time. I wanted to because this thing just kept climbing, I'm always maybe just fade my calls on Facebook because I've been not bullish this thing for a while. I can't believe the market cap. I keep looking at it from a valuation perspective. You got to throw valuation out the window when they got momentum because it's all that matters. It still has momentum. I don't know if it's going to be the gap and go here today or if they're going to come and fade in this thing, but it's up another 9 points. I'm sitting on my hands. This stock is just my nemesis, I think. I just can't trade it.
Hey, DJ's just popping in that they unveiled a new tool to read posts in news here. Just breaking news at 7 a.m. So, yeah, I mean, it's
J-Dot?
Yeah. No, not J-Dot.
Oh,
DJ.
sorry. Oh, DJ. Sorry.
Get your J straight,
Jeez.
okay?
Oh my gosh.
Brent, I was mean to Brent this morning, so I gotta be nice to
Thanks,
him.
man.
Why were you mean to Brent this morning?
because when we put on the to start the show up, I couldn't, my voice was coming through the computer, and I blamed him.
You blamed Drew.
I blamed Drew, and then you
said,
stuck up for Drew.
I said, wait, Drew is just, he's just trying to help.
And we didn't turn the mixer on. And Brent's in charge of turning the mixer on.
Didn't hit the big on button.
Yeah,
that thing helps.
I'll
that
remember.
Helps.
I'm in charge now.
So are you going to trade Facebook today, Dennis?
I just told it's my nemesis. I'm not trading it today.
What if it gets backs up to 63.95?
We almost have to move on right now because if you keep it on my screen for like another 10 seconds, I'm probably going to make it.
I just got one question. So, if it gets up to 63.95 again and there's a $500,000 at 64, will you short it? Will you short ahead of it?
No, because it'll probably take out the $500,000 at 64. It's 66 before I can blink my eye.
Okay.
Dennis,
I'm trying not to trade Facebook today. Odds are I probably will still trade.
Will
Something stays on my screen for more than 30 seconds, which is like right now I get itchy. I get that finger. I just gotta trade it. It's like an addiction,
Well,
so,
how about real quick looking at the Twitter chart? Is that any better for you? Twitter definitely looks like it's moving.
Ridiculous too. It's
moving today.
now. We're up
partly
$4 here
on Facebook, I'm assuming.
Oh, yeah.
Google also maybe getting a little pop on Facebook today.
I think all the momos are going to get a little pop on the Facebook, but Twitter is probably your most direct, obviously, and it is trading up here over $4 off the Facebook report now. It's at 63.70, went out at 59.45. So we're getting right back up into all this resistance in Twitter where we had in the upper 64s.
Yeah.
Thought we were going to take that out 3-4 days ago. Fooled me, went down. We're back here again now, so I don't know. I'm not doing very good on these Twitter and Facebook calls. I'm often okay, but then I've been good on these ones.
A similar pattern here. There must be a big Facebook or a social media fund or something getting out of things today, because in the last three brackets you had highs at 63.95 in Facebook, while in the last three brackets as well you've had a high at 64.25 in Twitter. So that's pretty rare formation there. If you go to the daily charts to take a look, you did have some highs at 64.69, so just under the $65 level. That's good resistance. Well, it is resistance for now in Twitter.
Joel, I know you're talking about like a fund actually trading social, but there is a social ETF. It's SOCL. I know, just a heads up. People might want to
What
watch.
a good ticker symbol.
Social, you get it.
All over that.
Yeah, I wonder what that chart looks like.
Actually, it looks kind of crappy, but it should be popping up here today. It's up 55. It's traded 100 shares. This looks like one of the thinly traded ones. Actually, it's traded 500 shares. I lied. Up 55 cents or 20.75. It's bid there at 20.70. So maybe this is the one to trade if you don't like all the volatility.
It does end up getting some pretty decent volume, average daily volume around 200,000. So for an ETF, that's
yeah. I mean that's kind of thin,
Thick enough though that you could probably make some trades on it. So I'll keep an eye on it.
For you, Dennis, you'll trade.
I'm shorting it. No,
you'll trade a $1,500 stock that trades 4 times a week.
Yeah.
So
I sit there. I used to trade that WPO. I don't think it's a $15 or $100. Actually, I don't even think it's Washington Post even around anymore.
Didn't the dude from Amazon buy that?
Yeah, they did. That's what happened on that one. I used to love trading that one when it was in the thousands, but I sometimes used to I never got down and dirty in the Burke A or anything like that. Not that thing. It was Matt Boswell. He'd get down and dirty in that Burke A. Remember that?
Yeah.
Trade $100,000 stock. He's like, I just can't. He's got like 100 shares of it, and it's like moving around his P&L, thousands of dollars every tick.
Were you messing around in AT&T at all yesterday? I mean, it did. It really got slaughtered, and then it.
Can you believe that? I was looking at it when it was getting down to $32. I was like, for real? Are they really knocking it down? I thought they wouldn't knock it down much below 33. They knocked it to 32.01. Everybody bidding at 32. Probably a big institution there. Not filled. Stock bounces all the way back. The bottom pickers paid off at $32. Closed at 33.31. That was an incredible move for AT&T.
And just you need follow through today, right? I mean, you're trading down 2 cents. You had a lot of short-term buyers, going like, "Oh, this is so many standard deviations out. I have to buy it. I have to buy it." So you got a lot of people, buying it all the way down. You came back. You closed 24 cents off the high of the day. You almost got to the previous two highs at 33.81, 33.74. I bet you got some guys lining up here. We went to 33.55 yesterday. I bet you got some boys lining up at 33.50 here. I just don't think it's gonna take off and whoosh right back up to that 33.50 level. What do you think, Dennis?
Yeah, I'd agree with that because you got a lot of days of consolidation that were prior to this in the whole mid 33. So a lot of people have positions on from those prices. We always say price has memory. You get the whole loss aversion and everything. And anybody that had bought the stock prior to the earnings, watch it fall $1.50 on and then come all the way back the next day. They're going to be like, okay, I'll take that off and be happy that I didn't lose any money. So I think you will find some resistance probably all the way through the 33 handle up towards, and then the major resistance is up at 34. But I don't think we'll see that today. But you never know. I didn't think we'd see that kind of range yesterday in AT&T either.
Great point. Besides that 32.01 washout low, the previous three lows were within 8 cents of each other, 33.35 to 33.43. So we'll see if that area acts as resistance today. What didn't they like about those numbers? I mean, holy Toledo! I mean, that's really a whooping.
Yeah, it was unbelievable, really, for a stock that's got a 5.5% dividend too. That's why I really thought the value players. It was trading down around when was it, like 32.70 in the pre-market or something, and we kind of thought that would hold because we thought the value guys would come in the 32 handle. They did. They just came in 70 cents lower in the 32 handle. They got it all the way down to 32.01. So I guess you get that vacuum right off the hop. You get people that were bottom picking right at the open 32.40, and the market likes to punish the max amount of participants. So if you get everybody that's buying that opening print at 32.40, you got to wash them out. So that's what it did. Just a few minutes later, we wash out all the way down to the 32.01 and then start to rally and then start to climb. So that's why I always say you want to kind of go with the flow a little bit. Wait till stock's rallying. Don't try to pick the bottom. Wait till it turns and start moving in your favor, and it often will work out better. Because if you were trying to pick bottoms, you might have got washed out when it was going down to the 32. But on the way back up, you didn't take much heat. So after it's hit 32, it just kept climbing, and basically back in an hour it was back above $33, and
What?
then 33 held.
When does this? When did this go ex dividend last? Do you have that in front of you?
Oh,
Because
it wasn't that long ago. Yeah.
yeah,
Well, you
but
can probably look at it on the charts. It's probably the gap in the charts from
yeah,
35
exactly.
down. I
Yeah,
bet that's it. Let's see if Verizon did the same thing because they go ex dividend on the
You,
same day.
you guys are
Yeah,
talking
I'd
about
imagine it was right around then.
AT&T, right?
yeah.
I
Yeah.
see the 8th ex dividend.
The eight.
Okay, yeah, then that would make sense. Yeah, that's the gap in the chart. If it went on the 8th, that was the gap down the next day. So yeah, so basically there's that play again. We always talk about AT&T. Strong before the ex-dividend date, often weak afterwards. It worked again in this case. I'm not sure, maybe the market had something to do with it too. But it seems like 4 out of 5 times that thing runs up a little bit in the ex-dividend date and then is weak for a couple weeks after. And that's exactly what we saw here again. Verizon obviously too had that similar move there too, where it was a little strong, and they often move together. But Verizon had a similar reversal yesterday. It was trading down significantly off the AT&T report, started rallying back at the same time. Actually, I believe Verizon closed positive.
Yeah, well, a couple things. One, the reason I was asking a T is I'd like to see this thing drift, for going in for another 2 months or so, going into that ex-dividend date, and then kind of come back into the 32 handle, and then I think you'll really get the players coming in, buying this thing, pre-dividend. The Verizon chart is a little bit. I think you might have had a little better chance of catching that because it did come down to support areas. You had a couple lows for the year in the 46 handle. You got the 46.69 yesterday. You had a low at 46.76 on the 21st. So a little bit easier to catch that. DJ's popping in here that looks like there's new subscriber issues for AT&T when compared to the numbers at Verizon. So that's probably what spooked people a little bit.
Yeah, Verizon did not make new lows. It's a good point, Joel, because he kind of put in almost a triple bottom. You could say 46.58, the low on the 14th, and then the low 46.69 from yesterday. So that whole 46.5 area held up nicely. So they probably shook you out in AT&T, but they probably didn't shake you out in Verizon.
48 looking to be good resistance in Verizon in today's session. 47.87 the high.
Big number.
Yep, Tuesday. 47.98 the high on Thursday.
All right, trying to figure out this Google move here too. Obviously, probably Facebook giving a little bit of a lift, but right now Google is up 29 points this morning. So you got the Facebook giving a little bit of a lift, and everybody is citing the Motorola Mobility sale. So if we go just over to the Benzinga Pro, what they sell for 2.91 billion in cash? They're selling Motorola Mobility, Brent. Is that right?
They are selling. Yeah, the number is 2.9 billion in cash.
To Lenovo.
To Lenovo's buying a lot of stuff lately. They bought a big business from IBM lately. Are they? They're an overseas company, right? Are they publicly traded, Lenovo?
Not in the U.S. The ticker on Lenovo, if you want to trade an OTC, is LNVGY.
LNVGY.
That's on the OTC with the ADR.
We were trying to make heads or tails of the valuation here in Google, and I don't think when we were doing our prep for pre-market prep, we really came to a conclusion that this move is justified by the sale of the mobility.
Well, even if you say just flat out $3 billion they get an extra from Motorola Mobility here, the market cap was 375 billion. So adding another 3 billion should put it up, like $6-7, something like that.
Right.
Or maybe Well, no, I guess if you add another 3 billion, it's 276 million shares outstanding, so $10. But it's up 28. So then you're saying the Facebook's worth 18. So trying to just do all the math here, man, this seems,
Dennis.
and I mean valuations, you're sitting there as an analyst, it never seems to work. It's all momentum too, so this thing's taken off. But I don't see how you add, how much market cap are we at? We're at like $7 billion worth of market cap today on a $3 billion sale. Seems kind of a little bit overdone to me, but who
They're
knows?
juicing it. I mean, 11. You got a high at 1141. Okay, and you fell off from the 1150 level really hard. You were down under 1100. You went to 1082.27. If people don't use this as an opportunity to lighten up their lungs ahead of earnings, if this rally continues, I don't even want to say what I'm going to do. I would be flabbergasted if this continued through 1141, the pre-market high.
So you're saying they're going to disappoint tonight because they do report earnings
I
here
think so.
tonight.
I think so. I think it's going to have like what a 200-point down day or something in Google.
Come on. You think you're going
Yeah,
to lose
they're
200 points on this earnings? I'm going to go do the straddle right now if you think that. There's no way it's pricing in that kind of move.
Oh,
No,
yeah.
seriously.
Well, oh, no,
Seriously.
yeah, they
What do you
do.
think Google can fall tonight on the earnings? If you think they report bad earnings, how much do you think it can fall?
It could fall 200 points.
No, you're crazy. I don't know why
Well,
you're
I know
drinking
I'm
your
crazy.
coffee here this morning. You got too much Bailey's in there, Joel, in your coffee.
Well, you know where I
There's
come up
no-
with that number?
How do you come up with
They
that?
rallied at 100 points on good numbers, right?
So it can go down 200 on bad. Why? First of all, why are they going to report bad numbers? I'm just curious as to your whole thesis on.
Because their ads are just so stale. I keep telling you, I already bought a pair of shoes and I already bought a watch, and that all these ads that keep coming up are the same thing. And I think that Twitter and Facebook and these other mediums are going to cut into the. I think their advertising revenue is going to be down.
I'll tell you why it's different with Google, though. When you go to Google, you are looking to click something. I'm going to Google, I'm searching something, I'm looking to click something. You get those sponsored ads at the top of the search page. You're looking for something. You're looking to click something. When you go on Facebook, you're looking for your friends' pictures. What are my friends doing? I'm not looking to click on anything.
Well, first of all,
Twitter's kind of the same story, although it's, sometimes there's links and other people are sending them. But the sponsored links on Twitter, I never click those. But on Google, I'm a clicking machine. I'm going in there looking for something. The whole business model, I believe, is a lot better, and that's why I think I think honestly, long run Google goes a lot higher. I really think that. I don't know on this report, but if I'm a long-term investor here, and I actually am in this stock. I bought it down at $500 a couple of years ago. I'm not selling my shares ahead of this report. Even if it goes down 200 points, and I don't think there's any chance in the whole world it does that, I'm still holding on.
So you click on the stuff on the right?
Stuff on the left, some of the stuff on the left too is getting paid clicks too. They're all, if you're at the top of the search engine, sometimes they pay to be at the top of the search engine. So it's not only the sponsored stuff on the right part of the Google. There's sometimes, at the top of the search engines as well, there's also things too, like that's relevant to what you just searched for. So when you go in, you type in search in Google and you type in shoes, it's going to bring you up, different types of shoes, but also it's going to bring the sponsored ones right to the top of the page. So
right.
that's,
Okay.
just a smart business model.
Well, I never click on the stuff on the right, number one. And number two, well, I don't have a Facebook account, so I can't really be helping for their advertising revenue, on that. But I don't know. It just seems like it's just had such a big run, such high expectations built in. I mean, it kind of, last couple quarters, it's really, done well and gapped up higher. I'm just kind of going like okay, they just can't keep up this momentum. And they've been spending a lot of money on acquisitions. They've spent a ton of money on acquisitions. I mean, eventually, they have to integrate the acquisitions into their, their business model. I mean, I don't know. I'm probably wrong, Dennis. I'm going to buy the 1,200 calls and see what happens. But when we were discussing the options earlier in the week, these weekly premiums, and maybe we can get Fari on to talk about it, are absolutely ridiculous. The premiums that they got built into these things. I mean, yeah, I guess you just got to be a seller of these options.
Well, let's go take a look at the Google right now. I'm just bringing them up here. So the stock right now, well, it's
That's not going to be any good.
Yeah, because the options aren't open yet. But we can get a feel for what they're pricing in for the earnings. So on the January earnings, when the stock was at 1107 yesterday, the 1105 calls were going for $33. The 1105 puts were going for $31. So you're pricing in a 62-point move, really. This is the weekly expiration. So that's really what they're pricing in. They're pricing in a 60-point move off those earnings. So, because if you were to buy that straddle, that would be your break even on that. That's just how I'm quickly figuring that out. So they're basically saying that Google can move 60 points around these earnings, which is probably right. I mean, and we watched them move 100 points last earnings report. And historically, we used to always say, remember we used to always say, was it going to be 50 up or 50 down? Because it always seems to go up 50 or down 50.
Yeah,
so,
now I've changed that. It's going to be either 100 up or 200 down.
100 up or 200 down.
All right.
I don't know what happens with the report. I'm not even going to speculate on the fundamentals, but I think long term, Google just has so much innovation there. I mean, we talk about the lack of innovation at Apple. Google seems to be the opposite. They're always coming out with new stuff. They're always coming out with different stuff. They're diversified. What are the boys in the Benzinga? What are the boys in the chat? And what are the boys in the Benzinga office? What do you think, Brent, of this Google? Is Brent there?
Well, I mean, it's just funny that they're announcing this a couple of M&A deals ahead of the earnings report. I don't know. I just think that they're getting into. I mean, if we're talking fundamentally, I think that a lot of people are sort of confused by this sale. But you got to remember the intellectual property with Google is huge. So there's probably some underlying intellectual property there that they're looking for that they're going to use at a later time. And I feel like that's sort of how Google has been operating. They kind of like quietly grab this thing over here and then put it to use a few years later. And at first, people are sort of speculating like, wow, that was a big lump of money that they paid. But I feel like it usually ends up kind of paying off for them.
Okay, so he's bullish with you. All right.
Joel's bearish. We'll see who's right tomorrow morning. So everybody wants to pop it. We should have did like a pool there and put the price on where we think Google's going to close tomorrow night.
Will you take 1235 versus 1035?
It's not going 100 points. It's not going up.
No, I'm talking about a long-term bet, so I just don't lose another Potbelly sandwich right away.
You're down 3 Potbelly. I got to stop betting with you because you're so in debt now. You're like the U.S. government here. You're just digging your
U.S. government dig.
Dennis, you're gonna have to.
That was a low blow.
You're gonna have to come across and start breaking some kneecaps. Pay up. Well, Joel, I feel like with a longer-term bet, I feel like the reward, has to be a little more outsized than just like a Potbelly. I love Potbelly. I'm just saying, I think it really would have to be like that steak dinner, that rumored fabled steak dinner.
I think you have an 8:30 number coming out. I do. Okay. All right, Dennis. What else we have going on?
We have so many earnings reports here. We'll try to go through the main ones for you. I'm telling you, there's like 100. There's like 30 or 40 S&P companies reporting here. Qualcomm last night. Let's go to that one. Go to that one from last night. They reported they beat $1.26 versus $1.18. Revenue was a bit light. I think the guidance was pretty good too, though, and the stock is popping up $1.68 here this morning.
Nice.
Street leaning the wrong way on this one. This thing was leaning down for 4 days in a row, down 71.12. Is popping back to 72.80 here this morning, so we're getting a little bit of lift. What they do after hours there, Joel?
After hours got a little bit higher than where we're trading now. You got to 73.40 in the after hours. Since then, you've pulled back, finding some support right here at 72.80. So those are your early parameters, 72.80 and 73.40. That's coming from your pre-market trading. Then if you go to the daily chart, which I have up in front of your eyes here, you had a high at 73.14. We've exceeded that. I think if we could get through the pre-market high, 73.60, the next resistance point, 74.36. But Dennis, how many times have you seen a chart like this? Then they come out with the good earnings, and people sell right into it.
A lot of people under heat from the last 5 days too. So it's always, it's a good point, Joel. You got to consider how the stock was moving prior to the earnings because that will give you a little bit of a tell on what might happen afterwards. And I think there's resistance all over the place up in the 74 area. How high do we get in the pre-market or after hours?
In the pre-market, we got to 73.40.
72.40?
73.40.
73.40. So a little bit off the 74 because I'm just looking at all those highs from December. I'm looking at the high back 74.32 on December 31st. Looking at the high from 3 days ago at 74.30. My whole thinking is if this thing rally did continue or it opens up a little bit high, I think you'll find resistance up there in the 74 handle. I just don't know if it's got the gas to get that high. So I don't think this is going to be one that just gaps and goes
Hey,
as
wait.
opposed to.
Oh, sorry, Dennis. I hate to go back to the AT&T, but I think we got a new chatter in here, Ultros, and he said he got in the T yesterday at 32.50. I'm just wondering, you stuck your neck out on the way down and you bought it, and you took the 50 cents worth of heat, or bought it the way on the momentum going back up at the 32.50. And because if you did that, if you had bought it on the way down, it wouldn't have been very pretty. But if you would have caught it back on the way up, let's say the only way you could have caught that with a buy stop, then you took absolutely no heed. So just let us know. It'll
Yeah.
just be interesting the way we play it. Okay,
And
next.
sometimes, sometimes if you're in for a long term, it depends on your time horizon too. Like you're looking at AT&T as a value play. I mean, long term here, it looks
50
pretty
cent.
good at a 5.5% dividend.
Correct.
You're looking at it from a trade though, a little bit different when you're picking bottoms. Always scary when you're just in a trade to pick bottoms.
Okay.
Triple M reported earnings. 3M, it's actually just trading up just slightly here, 25 cents. $1.62 versus $1.62 in line. Revenue a bit light, 7.57 billion versus 7.71 billion. Look at this consolidation in this 3M chart from the last 3 days. Three lows right in the whole 129 area. So support very, very well defined. Resistance, not so much.
Yeah, it did hang in there considering, the market got walloped, made a new low for the move. This is a big component in the S&P 500. This held up well. It did get a little bit lower than the previous day's low, but a beautiful double bottom there. Actually, a triple bottom, Dennis, if you consider it's a $130 stock, 128.66 to 129. So that's your major support. You're $1.50 away from there. 131.27 was the high from yesterday's trading. Got above it in the pre-market. Hit 132, Dennis, in the pre-market, but falling back from that level. You don't like to see it hit a high level like that and then pull back. So I'd be a little bit leery. Maybe that 129 level will come into play today in Triple M.
Also reporting UPS, they reported earnings in line, $1.25 versus $1.25, and 15 billion versus 15.17 billion. Guidance a little bit light here, 505 to 530. Oh no, that's not 15 billion. I was looking at the at the Visa. I've got them all written close, and we're gonna get to Visa here in a second. So yeah, so just a little bit light on the revenue, but the stock is popping up here in the pre-market. $97 is where it's ticked up to. It's trading at 96 right now. So UPS a little bit stronger off their report. And here's a similar chart to the 3M. Three lows in that whole 95 area.
Huge. Well, the pop got to 97. And then we've pulled back a stick off that. And the S&Ps are kind of pulling off, too, a little bit. Three lows between 95.01 or 94.95 and 95.17. So that's your major support point. They came out with bad news. When was that they came out there with a little bit of a lower guidance? And I think it must have been this day when they dipped in under 98. I think this was a day that
and then it came right back.
It came
right back the next
so
day.
Another scenario here where stock pretty good sell-off. You're getting some decent earnings, but at least based on the pre-market trading, getting up to 97 and quickly falling back $1. People are selling into this.
Visa also reported earnings, and they beat. And this is interesting because last night the stock's getting bid up like crazy after hours. It was getting bid up at 221, 222. So it's been up $5 before the report. They report this morning, and they do come out and beat 220 versus 216, 3.2 billion versus 3.13 billion. It seems like always when you get somebody really aggressively bidding it after hours, they seem to always be right. I don't know if I'm not saying they know something or anything, but they've got maybe a pretty good hint that something's going to happen that they're going to beat. And the stock's trading up here 6 points this morning at 223 right now.
226.75 pre-market high. Was not able to hold that level. Coming back, trading on the lows here of the last 45 minutes at 223. Looking at the daily charts here to get a little better perspective on this. Pretty good resistance in the 222 handle. Had a couple highs, 222.07, 222.36. So that should act as minor support here. But once again, selling off into earnings, getting the pop, and not really holding the move. And
It's
I
like
just before we go to the next one, you're gonna. I can read your mind, Dennis. You're gonna talk about Mastercard.
yeah, MasterCard is popping up here on this. And interesting that MasterCard had a big 3-day sell-off ever since they went. We always talk
Oh,
about
I
this.
know. Come on.
After they go split, don't we say that? They often show weakness. And I mean, the market helped us out with this call because the market was weak too, obviously. But this stock went split, opened up like $83 that day, and was straight down for 3 days, going all the way down to 75 bucks. Found some support at 75, then had 3 inside days. Now it's trying to get some life back. It's actually up $2 on the Visa numbers.
You know, why do I put MC in for that?
You'd think it would be a smarter ticker, but I think that ticker symbol, I don't know if that was gone at the time or it's not gone now. You'd think that would have been a smarter one.
They did it. My charts. I gotta get my charts fixed here. This is terrible because they haven't adjusted for the split. I apologize to our listeners for that.
MasterCard hasn't adjusted for the split there?
on one of my platforms it has, but not on the others. So
the chart, so it kind of
yeah.
looks funky.
What was the split day, Dennis? Was it what was it? 83, 84? That was last week.
Yeah, it's right around 83 or 84 bucks. So it sold off
Woo!
$8 after the split.
Oh.
So it's sold off 10% after the split. And we often say they usually have strength going in. They usually split. They often open up stronger that day and go down. This was textbook. It's exactly what it did for
And
3 days.
you know what's really interesting about this chart is that you can't see it, but on using your charts at home, that's what Jake always says. You had to gap up on the news. Remember, you had to when they announced it. You had a gap between 76.91 and 78.95 according to the split, and I mean it did come down and exceed it by quite a bit. So maybe they split the stock, so it would just come down and fill that gap.
Just to confirm, the split, the ex-dividend date for the split was the 22nd.
It was the 22nd was the ex-dividend date. And then we actually hung out, I guess, for 2 days up there then, because the next day we still hung out in the whole 83 area. So it took 2 days for it to really start selling off. It wasn't immediate. It was 2 days I hung out in that 83. But if you were selling it right as soon as it went ex-split and you got 83 bucks, good job, because you got a quick 8 points. It is popping back now here, though, so I hope you got covered, because MasterCard is on the rally with Visa.
Yeah, it's a couple highs in the 79 quadrant. We are trading above it. Actually got up to 80 in the pre-market. Dennis, now with the more this trading more volume, has it been a little bit more active stock? Well, it's still not trading a ton of volume, huh? Well,
it's better to trade than it was when it was an $800 stock. It was getting tricky when it was 800 bucks. And I know all the pair traders in our company were getting real excited that MasterCard was getting the 10-for-1 split, because now they can trade it with Visa a lot easier than they could when it was a $800 stock trading with a 3-point spread. So it is trading a lot better now here, and a lot tighter spreads, obviously, when it's only a $79
and
stock.
for you volume players here, and that pay attention to price as well as volume. The day that it washed out and made that 74.95 low, traded 13, almost 14 million shares. So a lot of people taking a stake on that day. So if you were looking for longs, puking and people taking new positions, that was a big volume day, and it signaled a nice turnaround.
Under Armour, 59 cents versus 53 cents. Revenue a bit light, 583 million versus 620 million. Does not matter. The earnings beat and the guidance, which they guide higher, 2.84 to 2.87 billion versus 2.77 billion on sales, is driving this thing higher. It's all about the guidance, folks. $94.65 is UA right now. Went out at 85.22. That, my friend, is new all-time highs for Under Armour.
Do you wear any Under Armour?
I have one Under Armour shirt, and it was bought for me.
Okay.
Actually, my sister-in-law bought it for me for Christmas. It actually is a pretty comfortable shirt, though, so I will give you that.
I just got my first Under Armour jumpsuit, and I'm like, oh yeah, Under Armour, it's just, kind of a fad. Dude, it's awesome.
Jumpsuit?
Yeah, like a hoodie.
Like pajamas?
I
or
wish
something?
it was a onesie, like
a hoodie.
like sweats, sweats and a
for
hoodie.
your criminal activities there, Brent?
Watch it, Dennis.
I'm having a little trouble bringing up my Under Armour chart here. Maybe getting a little hype here ahead of the Super Bowl. 95.93 is what you've hit in the pre-market. That blows away the former all-time highs here. Since it traded higher than that. Actually, traded up to 96.60. So
what are you talking about? I don't have that on my chart. I've never seen 96.60. You got funky charts over there.
What's a symbol?
UA.
I got a 96.60 print here, Dennis.
In the pre-market,
Yeah, in the
maybe.
pre-market.
Oh,
Oh yeah.
I thought you meant like on that in the regular session before,
No, no,
because
no,
it's new
no.
all-time highs today.
Blows away on new all-time highs.
Yeah, yeah, yeah. So pre-market, that's fine. So what's the pre-market high?
96.60.
96.60. So write that
Yeah.
one down. We're 2 points off that level right now, but we always know those pre-market highs and lows sometimes come into play in the regular session. That's where they can sometimes find resistance. So
And since
if I'm a
we're talking about Super Bowl stocks, why don't we just revisit this Buffalo Wild Wings here, going into the Super Bowl? Joe's Super Bowl indicator, which was
that's drifting down.
yeah. Look at that. I guess people aren't going to be ordering those skimpy wings for Super Bowl parties or something this year.
Yeah, instead they're gonna be ordering Domino's Pizza DPZ.
Is that on the rise? We haven't looked at that stock.
DPZ's been selling off there too. Look at, well, I guess everything's been selling off week, but that's 4 days in a row. DPZ's down after breaking out and making a double top. Made a double top there at 73.40, 73.41. You got to look at those formations, folks. Those double tops in place usually can signal a reversal in the other direction. Exactly what happened, down for 4 days in a row on DPZ.
Wow, look at that. The pizza maker from Ann Arbor, Michigan, selling off a little bit here. Is coming into some kind of support, though, here. Had multiple lows at well, we had a low yesterday at 68. Ooh, just closed just off the low of the day. Interesting level here. 68.52 was the low. Went out at 68.70. Right in the vicinity of a triple bottom that you had at the beginning of the year, 68 to 81 here. So let's see if Domino's Pizza can hold this level. If not, we could easily be trading under 68.
There's so many other companies to report, and we're running short on time. I'm just going to fly through a few of these for you just to give you the pre-market action and the reports.
Okay.
You got MO, which is Altria Group. They reported earnings and missed slightly, 57 versus 58, 4.4 billion versus 4.46 billion. The guidance kind of in line. It's trading down 30 cents right now in the pre-market. You had Blackstone, which is symbol BX. That's getting a huge lift, $1.35 versus 82 cents. That stock is bouncing up and trying to make new highs here too, new multi-year highs. Anyways, it's up at 32.90 right now. High from a few days ago, 33.41, 33.30. Also, Celgene reported earnings there. If you like the $160 stocks, it reported earnings at $1.51 versus $1.54, which is a slight miss. 1.77 billion versus 1.72 billion, which is a slight beat. It's kind of trading flat here this morning at 158.52. You had Eli Lilly report earnings here as well. Very light volume this morning. Only 300 shares have traded. 74 cents versus 74 cents. 5.81 billion versus 5.45 billion. So Eli Lilly kind of flat. Widespread on that one. You want to stop there for a second, give your analysis on Lilly, because I'm interested in this one because it's one of the biggest holdings in my portfolio.
Okay, let's take a look at Eli Lilly here. Wicked consolidation ahead of the earnings. Let's look at pre-market. Just hasn't done a whole lot here. I see an odd lot trade here. It looks at $53. I don't know, Dennis. I say if this thing does not hold the low from yesterday, which was 53.57. That coincides. Oh, it's already below there, huh? It's already broken through. Is there any volume
100
on
shares, though. Can you even count?
Yeah, I know. That's why I don't know. I mean, I'd just be a little bit worried here because you're getting into that whole vacuum area below 53.59 and 53.57. So I guess if it breaks through there, Dennis, I don't know. You could be at $52 in a hurry, but it's hard to base on the volume here that make that a $53 print. How were the numbers? Were they
in line?
They were in
yeah,
line.
they were in line. The sales revenue beat, but it seems like on the pharmaceutical companies, it's more about drugs than it is hard numbers. A lot of times, they will have moves off earnings, but these companies move more on just their trials, their different trials of the different drugs. So that's why you see Celgene kind of muted action to the report. Lilly's been kind of a muted action. So I don't think it's going to have like crazy volatility here today.
Okay. All right.
Potash, POT also reported, and this one's trading down significantly, 26 cents versus 33 cents, 1.54 billion versus 1.36 billion. So they beat on the revenue, but the earnings is a big time miss. Stock is down over $1 here in the pre-market. Man, this has been a straight bad week for potash. A week and a half ago, this was a $35 stock. It's now a $30 stock. Wow.
Yeah, it keeps on having problems here. I mean, ever since that cartel breakup, the stock is just look at that, was that really a 35.50 a few days ago?
Yeah,
And
it
now,
had been popping, and they've just been dropping it like just dropping it. $30 is huge on this though, because we made a low back in September just above 30, and then in October we got down to like 29.95. So I'm going to call the whole $30 area on this major support.
okay, all right, I'd have to agree with you on that one. Okay, all right, we're going to take a quick break here, and we got a good guest coming on. I'm anxious to talk to him, Joe Gits, and he is CEO and founder at Social Market Analytics, and he's gonna teach us a few things here about trading the market from social cues. So we're gonna take a quick break, and we'll be right back with Joe. Welcome back, traders and investors. We have a special guest on today, Joe Gits, CEO and founder at Social Market Analytics. Joe, how you doing today?
I am good. How are you guys?
We're good. We're all fired up with all these earnings and everything, and we got a lot to discuss with you. And tell us about your company.
All right. Well, Twitter is a leading indicator now, both positive and negative. And over the years, I've been building software for the capital markets area. Last couple of years that I was at Thomson Reuters, people have been asking me, professional hedge funds have been asking me about how to quantify social media. So I left Thomson Reuters and started a company called Social Market Analytics. The idea is to grab the intentions of professional investors and turn that into actionable intelligence for traders.
Now, are you only grabbing in your products? Are you grabbing just the professional investors, or are you grabbing like anybody that's tweeting about the company?
We are grabbing people that are professional traders, and that doesn't necessarily mean the analysts at Morgan Stanley or Goldman Sachs, people that are actively involved in the market. So it could be people who trade for their own accounts during the day. It can be the analysts at Morgan Stanley. So we screen both quantitatively as well as qualitatively and determine how many accounts we're going to follow. So Twitter has right now about 250 million active accounts. We're following about 400,000 that have passed our vetting process. And then we look at the tweets they're making, and are they talking about intentions that they're going to do, the trades they're going to make, trades that they're exiting, buy puts, buy calls, that kind of thing.
Okay, so you say that it's now the leading indicator of stock movement,
Yeah.
and you have the math to prove it?
Yeah. So what we've done is we have tracked the performance of our high and low sentiment securities over the last 2 years. And what we see is that stocks that have a high sentiment score, or our key S score, outperform the market by nearly 50% over the last 2 years. And stocks that have a low S score prior to market open have significantly underperformed the market. And that's with sharp ratios of nearly 2. And what we do is we've been providing this data to hedge funds for the last year and a half. And now we've just released 3 active trader products that will help the active traders to see what's happening in social media real time without having to open a tweet deck or try and filter the wheat from the chaff.
Okay,
I'm looking at your products here right now. So tell us about your products. You look like you have one free product here, the Closing Edge. First, tell us about that. What's that all about?
The Closing Edge is a summation of what happened in the market that day. So the stocks that were most active in social media during the day and what their sentiment scores are. So if I could digress for just a second. So imagine that you're looking at a standard normal curve. So I'm not going to get into too much detail, but it's not the level of discussion. It's not the sentiment level of the discussion, because otherwise you'd get Apple, Google, and Facebook every day. It's the deviations from that norm. So are people talking about a particular security 2 standard deviations more positive than normal, or
Right.
2 standard deviations more negative than normal? That's where you start seeing the predictive power in the data, and that's what we're giving you in our S-score. So the end-of-day report is where sentiment sits at the end of the day, top 10, bottom 10. So that you can use that for picking securities for the next day.
Okay, and do you keep a steady stable of people that you follow, or are you kind of mixing and matching? You know, how do you figure?
How do
we-
you screen? Like, how do you
Yeah,
screen?
what we do is once a month, we run a metric that determines the accounts that we're going to follow. So we look at how long they've been tweeting, what they typically tweet about, what percentage of their tweets are what we call indicative. Those are the people that we're going to follow quantitatively. Then we'll actually go through and look at the profiles of many of these people just to determine that they are who they say they are. But if someone like a Carl Icahn or Bill Gates or some influential person comes on the Twitter, we'll add their accounts manually. The reason we run that periodically is we don't want people who just open an account, start tweeting a bunch of stuff out to try and move a security price,
Correct.
and then stop tweeting.
Okay, that's what
And-
I was concerned about, because there's a lot of people, that are looking for their, their own self-interest in mind here, and they're going to put things
Absolutely.
out. Yeah, and I just was curious how you guys approach that.
Yeah, so absolutely. So the biggest thing that we do is we take the intentions of professional investors. And we work very hard to clean those guys. So you'll see on the news, you'll see people that have opened accounts, tried to move securities, and then it shows up in the news. Repeatedly, they are excluded from our metrics. We have yet to get hit by one of those different types of accounts.
Wow.
So you have do you have people screening, or you have an algorithm that's screening all that
It's
out
both
as well?
algorithm. Everything starts at the algorithm level. So
Okay.
we screen the 250 million Twitter accounts to boil it down to a universe of people that have a history. So we're looking at their overall track record of tweeting. Again, how long they tweet, what they tweet about, what percentage of their tweets include securities, how predictive have they been, do they talk about product qualities. What's interesting is that you get a very high level of contributors for things like the tech sectors. And so you get what we call a dispersion number, which is a breadth. That's pretty high. But for utilities, you get a much lower number of people, a much smaller universe, but the tweets that they make are typically a lot more predictive. So it's very sector and industry specific, and that's part of our cleaning process.
Is
Now, does this Closing Edge report break all that down by sectors? Like, what do
Oh,
you
yeah.
do in this?
Yeah, the closing edge report shows you sectors. It shows you top 10, bottom 10 securities as well as industries. But I'll tell you, if you get the open report, that's where your active trader listeners are going to want to be. And the reason for that is we publish 2 reports first thing in the morning. We publish an early edge, which is published at 8 o'clock Eastern, and then we publish an edge report. And what the early edge shows you is prior to the market open, what's happening in social media. What are the top 10, bottom 10 sectors, top 10, bottom 10 industries, and then any custom securities. Then we publish what's called the Edge Report at 9:10 Eastern, and that gives you right prior to the market open, here's what's moving. So you get an early view, and then you get a pre-market open view. And those securities, they move in that direction at a statistically significant level.
And what's the rate for it? What does that cost?
Well, the Edge Report is $29 a month. And that's the top 10, bottom 10 securities prior to market open, twice prior to market open. All the sectors, sentiment scores, top 10, bottom 10 industries, and then you can add your custom watch list. So if you have securities that you're following every day and you want to see their sentiment, you can do that. That's $49. And then if you wanted to see real-time intraday alerts, you can add those, and those are $99. And we've been giving this data to professional hedge funds for the last year and a half, and they've been taking our 1-minute feed of the universe and using that in their trading system. So this is a way to make that data available to the active trader, and they can start benefiting from it.
Is the number of followers a factor in your algorithms? I mean, if
we keep track, so some of the things that we keep track of, and it's not, we calculate effectively our own cloud score. It's not a cloud score. Number of followers would be one of the metrics we look at. How long they've been tweeting, what percentage of tweets are what we call indicative, what percentage of tweets are retweeted. Those are indications of influential people. And so that's probably our key metric in our patent applications.
Now,
is how we clean it.
Do you just look at Twitter, just tweets now, or are you thinking about looking at like stock twits or
well,
or
actually,
Facebook,
I'm glad you asked, because we've been looking at Twitter for a couple of years now. We've just recently integrated stock twits, and their data is very, very effective.
Okay.
We found their data to be very predictive, and that's going to be coming out to the active trader market in March. We're going to be able to start making some of those signals available.
So that's in the pipeline.
Okay.
Yeah. What we found in the Twitter data and stock Twitter gives you a broader signal, so you'll get about 2,000 securities a day that have solid Twitter signals. You'll get a smaller subset on stock twits, but it's a very strong signal.
Okay. Is anybody doing any automated trading from this yet?
Our hedge fund and professional trading clients are taking our API and putting it into their algos. It's good for directional indications. It's good for implied volatility calculations. It's good for risk. If you're a sell-side firm, it's good to be able to speak to your clients on what's happening. So it's basically, we started because my DNA is software for professional traders. It really started there, and it really took off there.
Talk about this S-score thing specifically again.
Okay.
Though. So just break that down for us.
So the S-score is a weighted normalized sentiment. And what does that mean? So draw a standard normal curve, and what it does is it identifies the S-score. So let's use a theoretical S-score of 2. What an S-score of 2 means is that the current conversation in social media is 2 standard deviations, which is a big number, more positive than normal. Okay, so that means that the current social media conversation is more positive than 96% of the prior conversations. So people are really speaking positively about that particular security. On the opposite, if the S-score is -2, people are speaking 2 standard deviations more negative than normal. So that means the current conversation is more negative than 96% of the prior conversations. And we have other metrics that help you determine how strong that signal is. So we have a dispersion metric, which tells you how broad the signal is. And what that means is if all the tweets are coming from one person, you're going to get a dispersion of near 0. If we have the tweets coming from all different people, you're going to get a dispersion of 1. So we realize early on that we need to provide this data and the metrics supporting it that hedge funds would want to use. So we basically are fully describing what's happening. We've got a delta number, which talks about the change in sentiment. We have a mean, which is the average level of sentiment. So Apple, Google, and Facebook are going to have a very high mean. And then we look at deviations from that norm. And that's where you start getting the statistically significant actionable intelligence.
Okay, Mikey's popping in the chat room here, and good question. Like, how good is this data, and who's trading on it?
All right. So, how good is the data? So, on a 2-year basis, the stocks with an S score of 2 or higher prior to market open have beat the S&P. So, if you bought the securities that had an S score of 2 or higher prior to market open and held those open to close, you beat the S&P by 50%.
Whoa!
If you sold the stocks that prior to market open had an S score of -2 or lower, you underperformed the S&P significantly. Right off the top of my head, I don't remember what the exact number is, but those stocks got absolutely crushed. So you say, okay, what is the statistical alpha in that calculation? The statistical alpha is, for the S score greater than 2, it's over 12%. So that's return in excess of any additional risk. The Sharpe ratio on that number is 1.92. The second part of the question was, who's using this? Hedge funds, high-frequency trading firms, banks, people that need to know breaking news before they're going to see it on CNN and Thomson Reuters.
But not before they see it on Benzinga.
No, absolutely not. Of course not.
Okay.
That's just crazy talk. And so our data now, our data has been available on the New York Stock Exchange feed for about a year now. And so clients are buying, NYSE clients are buying that data through the NYSE feed. And then it's also available on a firm called Market, which is a specialized data and research provider.
Do you have any competitors out there? I mean, you guys really seem to, you got a lot of smart people working over there. I see a bunch of PhDs and things like that.
Yeah, we've got the definite PhDs hidden in the back room cranking this stuff out, and they're fantastic. Probably our competitor that you hear the most is DataMiner. And DataMiner is more an event detection engine. What we do is we create a time series, and we're always on and always listening. And that's really different than anyone else out there. They're brilliant guys over there, but that's a different product set than what we're providing. We're really the only ones in the space that are providing actionable intelligence in a time series format.
I'm not sure if you're like on the road or whatever, but if you're your computer, I mean, is there any kind of, there's a lot of things moving today and a lot of pre-market trading, the Facebook, the Twitter. Is there anything you could walk us through?
Absolutely. So I'm gonna give you guys some names that are showing up in our early edge report this morning.
Great.
You ready?
Yeah.
Yep.
All right. CFN, CareFusion Corporation, has an S score of 4.21 this morning. That's freaky high.
What does that mean? What does that mean? What's that mean?
That means the current conversation for CareFusion Corporation is 4 standard deviations more positive than normal. That's 99.99%. Doesn't get much higher than that. So people are really speaking positively about that particular security.
Now, just to interrupt you, this is a company that probably doesn't have a lot of tweeting out there. If it's averaging only like 1 or 2 tweets a day, tweets would put it to 4 times the standard deviation. Do you guys account for like a minimum threshold or something?
So there's an S volume metric that we publish as well, and so S volume is the filtered tweet volume. And that's usually about 10% of what comes in on that individual stock. So the raw volume on that is about 200, and the S volume is 18 right now. So it's pretty low, and that's all published in this early edge report, so you can see it.
Okay.
Facebook is number 2, and Facebook doesn't normally show up, so that's kind of interesting. 3.93 S score with 971 indicative tweets. So that's a good number.
What's it indicating now? What's it indicating?
Healthcare is big today, too. So healthcare, we've got Cardiovascular Systems, Inc., NPS Pharmaceuticals.
What are the tickers on?
Okay, so cardiovascular system is CSII. Yep. And what's interesting about social media is you don't need social media to tell you you've got to watch Apple, Google, Facebook, JP Morgan every day. Whereas social media is good for the active trader is it gives them securities they won't normally trade. And so where opportunities are, stocks that are going to move higher and lower. And so that's what I find very interesting. So so on the top 10, I'm going to give you CFN. We already talked about that. Facebook, CSII, CLB, DOX, ININ, FSL, Frank, Sam, Larry, XCO, NPSP, and BID, Sotheby's. That's the auctions. So let's talk about stocks that are negative right now. So those were all positive on the early edge, and that's the early edge. So that was published this morning at 7:10 Central.
Okay.
All right, and then so on the short stocks, conversations that are more negative than normal. PRE, VPRT, Tractor Supply Company, TSCO. No, who's heard of that?
I have.
AIG, American. Well, everybody's heard of that one. NSR, Tupperware. And those are the big, significant negative ones this morning.
So is NSR Newstar?
NSR is Newstar. Yeah, it's a tech company, Diversified Communications. Not a lot of tweets and not a lot of short side tweets today.
Okay. All right. And so
pretty light tweet volume on the short side.
Okay, so here's a question for you too. Like some of these haven't traded here this morning, but some obviously, like a Facebook is already up 10 points.
Oh yeah, of course.
So it's obviously going to have a lot of positive sentiment going with it because I mean it's up $10. Does that mean like your statistics when you take that you take it from the opening price to the closing?
From the opening print. Yeah. So those numbers.
Yeah.
Yeah, those numbers that I was quoting earlier were from open to close. So yeah, Facebook's going to gap up $10, and it'll probably trade higher throughout the day, but it might fill some of that gap. But statistically, these stocks move higher, open to close, at a solid level. Yeah, but you guys have smart listeners, so they're gonna know that if a stock gaps up $20, you're gonna be careful before you step in front of it. Yeah, so you have to keep that in mind. This is a tool to use in your security evaluation process. A very powerful one.
Okay.
And that's what we're always talking about on the show is like tools for your trading toolbox. And this is another tool. And this is a cool tool, though. So, like, I got a lot of different filters, I got a lot of different screeners, but a social media filter, that's pretty cool. So, it's another tool for your toolbox.
Yeah, and that's exactly what it is. And what's cool is these names, they're not names you talk about every day. But we're always listening and always filtering the universe, and it gives you good trading names every day. And the reason we publish that early edge, because you've got time to go in and research those securities if you don't know them.
And are you able to use this in your own trading at all?
Yeah, we eat our own cooking. I personally eat my own cooking, and then we have some dollar trading that we've actually done with our data for some of our hedge fund clients.
Okay.
What I use in my own trading is the alerts. So throughout the day, I'll get a text message on my phone saying a security hit a certain threshold, and then I go in, and that's where I execute most of my trades. Is I get an alert intraday.
Okay, great. All right. We've had Joe Gits, CEO and founder of Social Market Analytics, and this is definitely something that I've thought a lot about, and using the social media as cues in the market. I mean, I guess from this standpoint too. I mean, just the Twitter stock. I mean, have you been playing that at all? I mean, do you feel?
I do pay a lot of attention to Twitter. You know what, guys? Let me if you got another second, let me see what sentiment's saying about Twitter, the stock.
Okay, great. Okay, that's great. I mean, that's it's certainly a mover, and the analysts have a lot of influence on it as well. A lot of volatility.
All right, so here are the stocks that are on my watch list. So I've got my own watch list. So I have Twitter itself. Twitter has an S-score of 1.99, so it's almost at that statistical threshold of being significant. Google is 0, so that's a normal conversation. IBM is negative 6.86, Microsoft 0.13, so both IBM and Microsoft are near 0. Chipotle Mexican Grill, love the burrito, that's a 3.05. So that's a positive standard deviation of 3, which is a big deal. Green Mountain Coffee is 0.4. GM is a negative 0.34, slightly negative, and then Ford is a negative 0.635. And Ford was on the big list yesterday.
Yep.
So those are stocks that I've found to be reactive to social media that I pay attention to.
Do you get any kind of singles on Herbalife today, HLF?
All right, let's check it out. Hang on a second.
Always a stock in the news.
Oh yeah, absolutely. All right, so I'm pulling it up.
Okay. All right. We're trying to get the chart for here as well.
All right, Herbalife is slightly negative 1.28.
Okay.
A negative 1.28. So it's still in that normal range, but what's interesting is volume has picked up in the last couple hours.
Okay.
What's interesting is that one's negative, but it's actually trading up $2 here. So maybe that's one that, they're going to come in and fade the open or something. It would be signaling.
Yeah. So some of the tweets that are coming in for Herbalife, stocks to hold on to. Here's one tweet that was referencing Herbalife: RSOL, APFC, SRCE, and HLF. And I don't know this account, so I'm not going to say it, but that's just some of the tweets that are coming in. So these guys are saying that they're going to hold on. A couple of stocks to watch today. Here's another one: ACC, USAK, CRDN, and Herbalife. So Herbalife is getting some mention.
Okay, one final one here. I know we want to let you get ready for the open here. Apple.
All right, Apple. Let's pull it up. Apple's pretty much flatlined right now, but the longer-term sentiment is heading negative on that one. That one's kind of interesting because that one is a little bit more longer-term, negative 0.5. So not a whole lot of social media chatter, and that's weird talking about Apple.
Okay.
So Apple has 600 tweets already today.
Wow, that's great. Well, Joe, I mean, you've been a great guest. You've given us like live data and input and things for our traders to use. And since you said there weren't many negative short tweets today, I think the S&P's went up about another $6. So way to go, Joe. Thanks.
Yeah, all right. Hey, guys, I've had a lot of fun. And call me back at any time. You guys have my number, and I am always here. If you want something intraday or you need a number, give me a call.
That's great, man. Thanks, Joe. Have a good day.
All right, guys. Have a good one. Bye-bye.
Thanks, Joe.
Wow, what a fun interview there.
Joe
That's
gets his fanny back on the show soon, huh?
Yeah, that's just interesting, the whole tool, like the social media using it all. It's just interesting. And it's interesting that they're filtering out. They're trying to get, obviously, a higher probability by putting in people that maybe know what they're talking about more. I'd be interested if they ever came out with something that took all tweets together too, to get like this whole herd mentality thing that I talk about as well, because they're filtering just maybe the top tweeters there. I wonder if they ever had something that would be a contrarian indicator too, by putting in everybody that tweets. Be interesting.
Okay, great. All right, Dennis, we'll let you get ready for the open there. We're going to turn things over to mighty Joe Young with the morning headlines.
One Joe's just as good as another, right?
But Joel's the best.
Oh, man. You mean Liage. Your name's Liage.
That was like the worst nickname anyone's ever come up for
Lox Liage is the best nickname anyone's ever come up with.
Yeah, go back to the drawing board, Joe.
Okay, all right. I'll have Shubs come up with something better.
Okay.
Oh, no, we'll call you Joel Buckfire. All right, today's editorial headlines from around the globe. The U.S. economy grew at a 3.2% annual rate in the October-December quarter on the strength of the strongest consumer spending in 3 years, an encouraging sign for 2014. The fourth quarter increase followed a 4.1% growth rate in the July-September quarter, when the economy was boosted by a buildup in business stockpiles. The Commerce Department says that for 2013 as a whole, the economy grew a tepid 1.9%, below the 2.8% increase in 2012. Growth was held back last year by higher federal taxes and government spending cuts. With that drag removed, many economists think growth could top 3% in 2014, which would be the best performance since the recession ended in mid-2009. Government statisticians will revise the growth number 2 more times in the coming months as more data comes in, and it could move up or down or sideways, backwards, any which way, who knows. Motorola Mobility, the Libertyville-based cell phone business with longtime Chicago pedigree, will have Chinese ownership under a deal announced Wednesday afternoon. Google, which owns Motorola Mobility, said it will sell the smartphone business to Lenovo for $2.91 billion. It is China's largest ever tech deal and Lenovo's second major buy on U.S. soil in as many weeks. Lenovo last week said it would buy IBM's low-end server business for $2.3 billion. In this deal, Lenovo, which acquired IBM's PC business in 2005, will get the Motorola brand and products including the Moto X and Moto G. Google will maintain ownership of the vast majority of Motorola Mobility patent portfolio. But as part of the deal, Lenovo will receive a license for the portfolio of patents and other intellectual property. Facebook shares were set to open up 15% at a all-time high after the company's resounding revenue growth underscored CEO Mark Zuckerberg's success in selling ad space on the social network's mobile app. At least 20 brokerages raised their price targets on Facebook shares, which were trading at $61.30 before the bell on Thursday. The stock has never before traded higher than 60 during market hours. After disappointing earnings from large-cap internet stocks like eBay and Yahoo, it was refreshing to see Facebook crush Q4 consensus estimates with accelerating trends in its core advertising business, CRT Capital analyst Neil Doshi wrote. Facebook said revenue from mobile ads represented 53% of its total fourth quarter advertising revenue, up from 49% in the third quarter. While the total number of ad impressions on Facebook declined 8%, some analysts attributed that to the company's shift to mobile and focused instead on the near doubling of ad pricing in the last year. Facebook's latest newsfeed ads, which inject paid marketing messages straight into a user's stream of news and content, are ideally suited for mobile screens and have boosted revenue in recent months. In other Facebook news, the company on Thursday unveiled Paper, a Flipboard-like reader app, as it continues to broaden its mobile offerings. Paper is made up of stories and themed sections, tying together your news feed with other themes and topics ranging from sports to food, with stories from publication. It will be available in the U.S. on February 3rd. Paper is just the latest step in Facebook's strategy to push more into the mobile world. Beyond its core Facebook app and Instagram, it has steadily launched mobile products such as its Messenger app. During its earnings conference call on Wednesday, CEO Mark Zuckerberg said the company was working on more standalone mobile apps. After a lengthy campaign by airport contract workers to receive better wages, the Port Authority of New York and New Jersey sent a letter to several airlines late on Tuesday ordering them to increase pay for some employees. The authority's executive director, Patrick J. Foye, F-O-Y-E, however you would say that, told the airlines to immediately give a $1 an hour raise to workers who made less than $9 an hour. They should eventually receive $10.10 an hour, Foy said. The letter was sent to 4 airlines, American, Delta, JetBlue, and United, and affects workers at LaGuardia and Kennedy International airports. Mr. Foy asked the airlines to grant another request from the workers to make Martin Luther King's birthday a paid holiday. Contract workers should be paid for the holiday, Mr. Foy wrote, as are Port Authority and airline employees, and the pay should apply retroactively to the holiday month. German unemployment declined more than forecast in January as companies grew more confident in the strength of Europe's largest economy. The number of people out of work decreased by a seasonally adjusted 28,000 to 2.93 million after falling a revised 19,000 in December, the Nuremberg-based Federal Labor Agency said today. Economists predicted a drop of 5,000 according to the median of 34 estimates in a Bloomberg News survey. The adjusted jobless rate unexpectedly fell to 6.8%, unchanged from a revised December figure and matching the lowest rate in at least 2 decades. Nintendo fell in Tokyo trading, reversing earlier gains as President Satoru Iwata failed to impress investors with plans to improve profit at the struggling video game maker. The company won't heed calls by some analysts and investors to release existing game titles for smartphones, Iwata said at a briefing today in Tokyo. Nintendo fell 4.3% to close at 12,325 yen after saying it will stick with its main business model, focusing on both gaming hardware and software. Next up, a sports law expert said he expects the NFL to fight hard against former Lions running back Javid Best's lawsuit that accuses the league of fraud, intentional misrepresentation, and negligence with regard to mild traumatic brain injuries. Best suffered 3 concussions with the Lions after being a first-round draft pick in 2010, and the last one in October 2011 forced him to miss the entire 2012 season and be released by the team in July 2013. I think the NFL will fight it hard because they won't want to face 20, 30 different lawsuits from individual players every year for the next 10 years. Jeffrey Rapp, a sports law professor at the University of Toledo, told the Detroit News on Wednesday. Best, who turns 25 today, January 30th, is seeking economic and non-economic damages that will include regular medical monitoring to test for neurodegenerative disorders or diseases. The 90-page filing does not include a dollar figure, only that it is in excess of $25,000. Best's lawsuit also claims the NFL failed in its duty to protect players by allowing him to enter the draft in 2010 despite his history of concussions while playing at college in California. Okay. Well, you only put CAL in here, so Cal. Around the sporting circles that
We got to
not
get
in.
Chubbs a mic so he can defend himself. Joe's like, yeah, Joe's always like, oh, you did this, did that, and now
It's like on Top Gear, the Stig, the race car driver. No one knows who he is. He never talks. They just talk about him. That's what it's like. Like I'm wondering if the people in the chat room actually think Chubbs exists, or if I just blame all my foibles onto somebody else.
Chat.
In doing so, Best alleges the league caused him permanent and severe injuries. Best suffered 2 concussions during his junior season in 2009, one that forced him to miss the final 4 games. He gave up his senior season and entered the draft. And today's trivia tidbit. Who exactly was the first broadcast radio station is up for debate. However, on August 20th, 1920, E.W. Scripps' 8MK in 1921 changed to WBL and then to WWJ in 1922. In Detroit started broadcasting. It has carried a regular schedule of programming to the present and also broadcast the 1920 presidential election returns, just as KDKA, what many consider the first U.S. licensed commercial broadcasting station in Pittsburgh, did. Inventor Lee DeForest claims to have been present during 8MK's earliest broadcast, since the station was using a transmitter sold by his company. WWJ has the highest field strength in a single direction of any AM station in the United States. And just as a side note, my great-grandfather was a proponent of the start of WWJ 950 as he invented the wireless telegram.
Wow.
Question: what famous character made its radio debut on this date, January 30th, 1930? Batter up, everybody.
Can you say it again, Joe?
What famous character made its radio debut on this date in 1930? January 30th, 1930. What famous character? Laura, do you have a guess? She's not even listening.
Do you type in like sweet things that happened on this day in years past to find these trivia tidbits?
Shubs
'Cause this is
actually
awesome.
got a desk calendar for his birthday that has trivia tidbits on it, so he says we'll never have to wonder again what
Awesome.
the day's trivia will be. So what famous character made its radio debut on January 30th,
Oh
1930?
man, I know this.
Radio character. Gotta guess. We gotta guess.
I had a guess, but I already know that it's wrong because obviously I have the answer.
I want to say it's gotta be.
It's a character, so it's
I wanna
not a real. I mean, it's like.
It's yeah. I want to say like some kind of. I was gonna say like a cartoon character, like Mickey Mouse or something, but
No,
that wouldn't be
Joe,
radio.
Joe, can you? I know people there. How about J Dot
J Dot
coming
saying
in?
Amos and Andy.
Oh, good guess, Jada. But
Oh no.
Can you give a hint?
a hint?
I think we do need one hint here.
Are there any fans of A Christmas Story?
Raising hand now. Yes.
Do you remember when the dad
Oh, I
was
know it.
doing-
I know it. I know the answer.
You know the
You don't
answer?
even have to. Yeah.
What's
It's the. Should I do it or not?
Yeah, just go for it.
The
man.
answer is most definitely Annie Oakley.
No.
No? Oh
It
my
was gonna be. You
gosh.
remember when he's doing the
Dang it.
crossword in the beginning, and he says, what is blank's nephew? The name of blank's nephew's horse.
Oh,
There it is, the Lone
Jake,
Ranger.
Jake,
With
Jake.
the stirring notes
Jake.
of the William Tell Overture, the Lone Ranger debuts on Detroit's
Nice.
WXYZ radio station. The creation of station owner George Trendle and writer Fran Stryker, the masked rider of the plains, was born. Historical accuracy notwithstanding, the radio program was an instant hit. Children liked the steady stream of action, and parents approved of the good moral example offered by the upstanding masked man. Soon picked up for nationwide broadcast over the Mutual Radio Network, over 20 million Americans were tuning into the Lone Ranger 3 times a week by 1939. In an early example of the power of marketing tie-ins, the producers also licensed the manufacture of a vast array of related products, including Lone Ranger guns, costumes, books, and a popular comic strip. That wraps it up for me today in the editorial headlines. Just a reminder, ladies and gentlemen, that the pre-market prep show would not be possible without our dear friends at OptionsHouse, who'll give you 150 commission-free trades just for signing up with an account through this page. There's links at the top, at the bottom right. Go ahead, make a click, sign up with an account for OptionsHouse, get 150 commission-free trades just because you listen to Benzinga's pre-market prep show. That does it for me. Brent, are you around?
Just a correction yesterday from yesterday's trivia that I threw out there, and we were wrong on something, and I brought it up with my assistant.
I think I was wrong, right?
You were
I'm
wrong.
admitting this one. I was
Yeah.
most definitely
Can
wrong.
we
Yeah,
rehash
but
this? 'Cause
unfortunately.
I don't recall.
Yeah, but I mean, I'm even more wrong for saying it. We were talking about the last line of that movie.
I do have the correct line.
Okay.
If you want to ask me.
Yeah, what's
today.
the correct line?
The correct line is.
Wait, what movie was it?
We were talking about Casablanca.
I said the last line from Gone with the Wind.
Exactly.
I'm sorry. I can't help it. I really love Gone with the Wind. I think about a lot of other movies, and it just ties back to Gone with the Wind. So the last line in Casablanca is, "This is the start of a beautiful friendship."
I think the last line of the movie is, "Here's to looking at you, kid."
What?
Yeah.
We're gonna now. This is a battle. Potbelly
Yeah.
lunch. Potbelly lunch.
How about lobster lunch?
You want to go Potbelly? Can I transfer it to Dennis if I win?
No, I'm
gonna
don't
go
condone
Here's
that.
to looking at you, kid, when
He's
he's on the
looking at
airplane
you,
or something.
Kid. Is it the last scene is definitely an airplane, but I think as they're walking away. I think so too, Shubs. Shubs is saying that Joel's a little early, and I think
Casablanca wasn't the plain one where it says maybe not today, maybe not tomorrow, but you'll regret it if you don't get on the plane or something like that. Isn't that the
right
last line
that
in Casablanca?
I think that's the line that's right before. Oh, Shubs has got the YouTube video. He's listening. I was gonna say I think that line is right before the one
Look
that
at
Joel
Chubbs
gave.
with the YouTube video. Holy
He's watching Casablanca.
Look,
with
they're walking
Spanish
away.
Subtitles.
They're
in it
walking
right now.
away, and off in the distance,
Here's
this is
to
the
look
start of a beautiful friendship.
I think it's here's to looking at
That
you,
was-
kid. All right, we'll see.
It cuts off this YouTube clip. YouTube fail. YouTube cut off right.
Are we
before
on
the
for
very
a
last
are we
line
on
of the
for
movie.
a Potbelly lunch?
I'm down for
We're
sure.
down.
I
Okay.
like you like the chicken salad. I like the Mediterranean. So we already got our bids in. We got our orders in. We shook virtual hands.
Okay. What about the markets?
So we did have. Huh?
Brent is correct.
Oh, no.
Slav is correct. He gets a Potbelly lunch,
Sweet.
and so does the rest of the news desk.
Yes.
Oh, yeah.
No problem, news desk.
We
It was
won't
people
mess-
born in the 80s versus the 60s, Joel.
Look
I'm
at that.
sorry.
How does that even happen? And it happened.
Nice job,
Shit,
Brent.
God.
I'm really
Thanks.
proud of you.
Thanks.
I'm gonna blame my sister and Lisa for that one.
I mean, I guess I maybe I made up from my fuddle yesterday, but we have been climbing, Joel. I
Yeah,
know
how
you wanted
come?
to transition in the markets there. Well, at 8:30 we did have a data point. You guys were kind of chugging away on the news, so I didn't exactly want to interrupt you. The market wasn't quite moving a ton right after 8:30, but off to the races starting about 8:40. Bid up from, let's see, I'm looking at the S&P futures below 1774. Did I say that right? 1774, right around 8:30. Now we're at 1784.
Whew.
Gained about 10 points. And the data that we had out, we did have the weekly jobless claims. Those come out every Thursday. A little better than expected. 330 versus 348,000 for the weekend of January 25th. But kind of the bigger data point that we had out was the advanced reading for fourth quarter GDP. You get three readings with each quarterly GDP. There's an advanced. There is I forget what the middle one's called. Advanced something, and the last one is called the final. And this reading just at 8:30 came in right in line at 3.2%. So although it was in line with what economists were looking at, 3.2% figure is pretty strong. So I guess the market kind of responding favorably to that.
Yeah, it looks we just made a high at 1785 here. Kind of had a weird high yesterday because of that turkey news, which
Yeah.
we we still are trying to figure out there how raising interest rates by a lot is good, but the market did pop on it. So kind of a weird area here because you really truly have yesterday's high at 1801 and a quarter. You had yesterday's intraday high, I believe it's 1781. So putting all that together, I'd say we hold 1781 on the upside here. I think we're good to go north and maybe get into that 1790 handle. If we do fall back below 1781, I think get back down in the 1770 handle. That's a ways
That's
to go
a
to
it's
get
a
to
lot
the
of air, right?
yeah, it's Air Hanover here. Just kind of going up on the good data and the good news. Even though I just want to go back to this Facebook here, and we did talk about the 63.95 level, and that's really held up here in the pre-market. They, in fact, during the show, they went back up there a few times. But if you're looking to go on the Joe Gits theory here, and buying with the positive. S number, then hey, maybe it's not a bad time to pull back from the high at the open. But if you are buying this thing, just be careful, and also keep an eye on that 63.95 pre-market high.
That was a great interview. I did like that interview a lot. Thanks to Joe Gets one more time, and we did have some good engagement. So if anyone has not entered the chat yet, if you are looking at the screen share where Joel's controlling all the nice charts there, if you scroll down just a little bit, there is a chat box that you can log into and sort of get a little community going on. You can throw in some tickers if you want Joel and Dennis to take a look at some of the stocks that you might be trading. Scroll down and log in and kind of join the community. It's kind of fun. The opening bell did just ring about 50 seconds ago. We are open for business. I'm going to hand it off to Shaky Jake here in a sec, but let me go through a few of the top upgrades, downgrades. We did have an upgrade on ServiceNow, tickers NOW at Baird. Firm upgrade the stock to outperform. Atlantic Equities upgrading shares of Union Pacific to overweight this morning. Cowen upgrading shares of Canadian Pacific to outperform. Craig Hallum upgrading shares of Flextronics, ticker there is Flex, to buy. JP Morgan upgrading shares of Autodesk from neutral to overweight. And then Citrix did get, I'm going to jump ahead of myself here. They did get, let's see, 1, 2, 3, 4 downgrades to neutral this morning. Stevens, Baird, Pacific Crest, Needham, and JMP downgrading shares of Citrix to market underperform, slapping that sell rating on. But there was one analyst sticking his or her neck out at Drexel Hamilton. Citrix upgraded from hold to buy. Joel, probably want to take a look at this one really quick. Stock's down about 11% this morning following those results last night. Pretty large volume also in the name this morning.
Okay, seen that.
CTXS is your ticker there. I always get this one confused with CTRX, which is catamaran.
Okay.
So don't do that.
You know me. You're the symbol master. So CTXS.
CTXS, yes. Charlie, Tango, X-Ray, and Sandy or Sierra. You can use whichever you like.
Wow. Whew. What a whooping, huh?
It's getting crushed, really.
Wow.
And analysts this morning definitely not helping. 5 downgrades this morning we got.
Wow. Thanks for the downgrade. Now that
So in this case, I mean, I pointed out that upgrade from Drexel Hamilton, you sort of leaning on not towards sentiment, but you would rather have an analyst sort of stick their neck out and upgrade something like this after the fact versus, kind of jumping on the bandwagon of downgrades here. Does that float your boat a little more?
I respect the guy. I mean, you did come down in the pre-market and you hit a low at 50. Let me see. The pre-market low was 51.50. They did beat it down to 51.06 here off the open, just probably washing some people out here. I just would go, if you're looking for a swing trade, you got to rely on the 50.21 low. Back in August, 50.21 low. You had a low in September at 51.21. So, I don't know. I'll stick my neck out here. I'll go with the only guy that is trying to buy this thing here.
There you go.
Maybe just a little contrarian play here. It had, like I said, it hasn't been down Wow, this is when I'm looking at this $50 level.
Mhm.
This stock has not been down here. Did I say 2011? Did I actually get it that correct? It's
Um,
2011. So
wow, and that it was that the stock wasn't trading around here during 2011. It was kind of a dip down and then a pop back. So going back to that sort of anomaly in the 2000, going back further from that anomaly in the 2011 chart, that'd be like going back to even mid 2010 that it hasn't been down here.
yeah, yeah, definitely. So, okay. All right. Just taking a look at the Facebook here while we switch gears here. Really got overdone in the pre-market, 63.95. We've been talking about that number. In the regular session here, opened up 62.30, had a dip down. People that were shorting off the open tried to cover it the whole number. 60.99, stopped at 61 even. We've rallied back up here. I guess if you're waiting for a breakout above the open, 62.30, keep an eye on that. If not, this is the way things are opening up in the first few minutes here. People using this opportunity in Facebook to sell.
Yeah, Joel. Well, I guess I'll hop on the show with you here. We do have that crazy move in Facebook. Wow, that's impressive. Quite a move to the upside. Have you been looking at some of the other social media names this morning? Because they are getting a boost. Last time I checked, Twitter was up over 8%, I think. See where it's at now. Tango Whiskey, Tango Romeo for anybody that's following along on their own charts there. Let's see if I can pull that up real quick. But Twitter was up quite a bit this morning. Yeah, 8.81% is what I'm seeing right now. Looks like it may be heading for that $65 level. I think we should probably do a run through of some of these social media names. So Joel, first off, what are you thinking of Twitter here? You know, obviously getting a huge boost from Facebook's numbers.
Yeah, a little bit different scenario here than in the Facebook. You have taken out the pre-market high, so a little different scenario. You did have a high at 64.35. So Twitter here on the move here. We've even exceeded the high that you had at 64.69. We're trading above that right now. So if I was still playing for this thing from the long side here, I wouldn't like to see it dip below the 64.50 level. Low on the session, 63.30. But that old high here, I think should be the swing number I'd be using. If it just rallies, it's just going to keep going and going and going and going. You just don't have any resistance after that level until you get into the 67.73 handle. I'll go out on a limb here, and I'll say I don't think it's going to 67.73 today.
Alrighty. Another social media name that's getting a boost this morning is Yelp. Yankee Echo Lima Papa. They're up over 4.5% on this news, so up over $3. Nice little rally for Yelp. Any thoughts here?
Do you use Yelp at all?
You know what? I used it once, I guess, on Saturday.
Oh, that's right. That's right.
To try to figure out that. But other than that, I mean, I don't use it a whole lot. I don't know. I guess at this point, I don't use it, but they seem to be doing fairly well.
Believe it or not, I do have a level in this thing. Hit 76.16 just a few minutes ago. You had a couple other highs in this 76 handle. 76.25 on the 28th. And on the 27th, 76.04. Someone is targeting that area, 76, as resistance.
Another one I will look at real quick is Pandora. Just broke through the $35 level here, up over was at almost 6.5% here, over $2. So Pandora Media, ticker Papa, is on the move to the upside. So any thoughts here? Is interesting. Just kind of broke above that psychological level right there.
Still not up at the all-time high. Rich Trullo's been all over this one. We've had him on from Albert Free & Associates. He's been touting this stock here. 35.49 is the high you've hit in the session so far. It looks like you are running into a little bit of resistance. You had a high at 35.70 on January 22nd. Another high up at the 36s here. So I think I'd be more apt to sell in the higher 35s than buy.
All right, so I think it's time for us to do a quick earnings rundown of some of the big companies we saw this morning. Got to start with the biggest out there, ExxonMobil, X-Ray Oscar Mike. EPS came in at $1.91, slightly missing expectations of $1.92. Revenues were thin as well, $110.86 billion versus expected $113.99 billion. So a miss on the top and bottom lines there. And then no heavy guidance out yet, but can we kind of keep an eye on that? Joel, what are you thinking of Exxon here? Obviously, a huge component of the S&P.
If you want to get in, near where Warren got in, or at least when it was announced. Here's your opportunity in the issue. You did have a gap up day when that announcement was made on his 13F filing. Did come back to the 92.92 level. That was on December 2nd. You have hit 93.06 in today's session here, so it did bounce off support. 94 is a high. You need to go up another 65 cents to fill the gap. Don't know if I'd be rushing into this today. I think what I'd like to see is maybe go down and make, one or two more lows at the $93 level, kind of, prove its mettle, and then, perhaps start to nibble on it. But, man, this thing's $8 off that all-time high that it made at the end of last year, just like everything else. So 101.74 down to 93 so far. Pretty good sell-off. Like to see it build a base at 93 though before sticking my money into it.
Moving on, we've got another major transport that reported this morning. That's United Parcel Service, UPS, Uniform Papa Sandy's the ticker there. EPS came in right in line, $1.25, while revenues came in a little shy of expectations. They came in at $15 billion flat versus expected $15.17 billion. So UPS actually they were having some of that poor guidance there earlier in the quarter. They did give us some a look for the fiscal year 2014, guiding EPS between 505 and 530. The street was looking for 531 though, so guiding below street estimates there. If you remember back on January 17th, the company lowered its fiscal year guidance and lowered its fourth quarter guidance. So we're kind of expecting a lower fourth quarter report, than they had brought in earlier, but now they're lowering their fiscal year for this coming year. So I mean, you could look at this as a structural thing for the U.S. economy, for commerce or whatever, or it could be that they're losing out to a competitor. Either way, it seems to be some kind of bearish news here for UPS. Joel, what are you thinking here?
Still trading up though on the session. Kind of interesting here. First of all, you had the big sell-off, ahead of the earnings here. Similar to the market. Popped up to hit 97 in the pre-market, and then if you were quick, maybe some size there at 97, people were leaning on, got right back up there in the regular session, ticked up there to 97, has quickly pulled back almost $1, and now you're at a former double top yesterday's high was 96, so filling the gap here. So crucial for FedEx to hold this $96 level. We could easily fall into the low 95s.
We also had 3M reporting this morning. It's Mike is the ticker there. EPS came in at $1.62, which was right in line.
What happened?
Revenues came in at $7.57 billion, missing expectations of $7.71 billion there. So missing on the top and then matching on the bottom. Let me see if we don't have any guidance at the moment, but it looks like that miss on the top line has really been hitting things. Probably check out that conference call to see what investors are so worried about. I may need to dive deeper into this release, but 3M, Mike.
Yeah, going down. And I guess people aren't buying tape anymore. 132 was your pre-market high, and it quickly sold off for that level. Another scenario here, we have a stock selling ahead to earnings. They pop it on the news. There was a former triple bottom at the 129 level, so if you got a chance to load up on the short side, it was a double bottom, 129 even and 129.10. So if you got a chance to load up going through that level, you would have had to been quick. It opened up at the high and just went straight down here. If you do get a rally back to the 129 level, should be good support. On the downside here, if this downward momentum continues, you do have a double bottom in the issue at 125.98 to the tick, 125.98, the low on December 12th and December 13th.
Another earnings report I want to take a look at this morning is that of Eli Lilly. It's Lima Yankee. EPS came in right in line on the bottom at 74 cents, while beating slightly on the top line there. $5.81 billion versus expected $5.45 billion. I got to pull it up and see if we can get any guidance. We do have so obviously a beat on the top line and a match on the bottom line. No significant guidance on this one here. So what are you thinking of Eli Lilly here?
Yeah, kind of got fate. This had a straight print at 53 in the pre-market. Got up to the two-day high. The two-day high was Actually had a couple tops there in a row at the 54.56, today's high. Going back to Monday and Tuesday, you had highs at 54.53 and 54.67. So building a lot of resistance in the upper 54s. If also coming back on the downside here, is the market starting to give away a little bit. The 54 low is only 9 cents above the close here. So if they take it down through the 54 level, take out the close here, easily see 53.57, and below that, owners of Eli Lilly, look out, because that chart is not looking good under 53.57.
Oh my, oh
Dennis,
my.
alert. I'm sending you an alert. Alert on your Eli Lilly.
Well, after the close, I want to do a quick preview of what we're going to be seeing after the close. We do have Amazon. We do have Google coming.
Whew.
We have Chipotle. So we've got a couple of big names there. McKesson, Broadcom, Chubb, a few other names. So, yeah, some big names after the close. I think we had more this morning, but we do have some names to watch out for there. I mean, obviously the tech sector has been doing pretty well so far. You know, Facebook beating, Apple's hurting a little bit, but you know, lots of news recently with Google getting rid of this Motorola unit. Any thoughts on Google here?
Yeah, I mean, I was kind of definitely egg on my face here, saying I didn't think it would take out the pre-market high here. Got all the way to 1150, so nice move for Google. Option players, I don't even know how to play this one. I guess you could look to, play some out of the money things here. Let's see here. We hit 1151.33 in today's session, and then if you go back, it fell off a cliff from the 1153.55 level. So now you're all the way back down in the 1130s here. I think people maybe wanting to lighten up, just considering this thing traded 1082.27 back on Monday, and it's rallied some 70 points here. So perhaps a good opportunity if you want to lighten up. So Jared is hopping in here. Dennis, Joel. I think Joel holds some Newmont. It was actually Dennis was holding that for a swing trade. Gold is getting shellacked here. Let's just take a quick look at Newmont here, and we'll close out the show. Gold just not holding the rally. It tried to get up to the 1270 level a few times here. Newmont pulling back on the session here. Really no support in this. I mean, we bounced off the $24 level. That's the low. Next support point I'm looking at is 23.55. So, okay, folks, have a good trading day. We should have a jam-packed show tomorrow with the Google earnings. Have a good trading day.